The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box with Karen Cho and myself, Steve Sedgwick, and these are your headlines. More angst in the auto space. Stellantis CEO Carlos Tavares steps down effective immediately. Meanwhile, thousands of workers at Volkswagen plants in Germany prepare to strike as a bitter labour battle heats up. Wall Street clocks fresh records to close out November with the Dow and the S&P 500 seeing their best month of the year.
The French far right digs in, threatening to topple the government unless further concessions are made to the budget. But Finance Minister Antoine Armand says they will not give in to blackmail. Elon Musk deepens his feud with OpenAI CEO Sam Altman, filing a fresh injunction to block the ChatGPT parent company from turning for profit.
Good morning. How was your weekend?
Yeah, very good. Thank you.
Did you manage to see some cinematic joy?
I did that the previous week. This was about shopping weekend for me. I saw Wicked and I saw Paddington the other week.
Oh, goodness me, you've
exactly.
done it well. Charlotte, who's not here yet because we haven't introduced her, she also saw Wicked this weekend. I saw Moana too.
Oh, we've done the whole lot.
We're kind of there, aren't we, team? Yeah. So children's family movies galore.
Paddington.
I haven't seen Paddington yet.
No.
You've seen Paddington.
I saw Paddington.
You've seen Paddington?
For everyone.
Not yet, it's on my list.
I'm looking forward to it. I do want to get back to some more serious matters, so let's pretend I didn't introduce you and get back to Karen to start off with. Our headlines. It absolutely filled me with joy if I was a US investor and dismay if I was a European one. Let me go through the four headlines very, very quickly, what we just did there. Stellantis and Volkswagen. Whoa. French budget. French politics. Whoa. Over in the United States, record highs are on equity markets as well, and two stellar technology companies fighting to see who's going to be the preeminent one. They both happen to be American. So on every level, I see Europe scrapping around with old industries not managing to adopt to new and scrapping around with woeful budget situations without growth. And in the United States, ebullient markets plus two very strong technology companies nitpicking, in fact three, because you can add Microsoft in there, can't you, as well, nitpicking amongst themselves.
I don't disagree with the tale of woe around the European companies. I completely agree with that. But
yes.
The US story just said different things to me, away from the big market boards and the records we saw. I think the story around Elon Musk taking on OpenAI is significant because you've got a person here who has fairly huge businesses and new economies, but also the word of the president. And everything we've been hearing is about taking down the deep state, changing reforms, and whether Mark Zuckerberg jumps on board as well as part of the reform team.
You don't actually believe all that, do you?
Let me finish. But the point is, you've now got Elon Musk pushing back against one of the growing AI companies. So are we creating a new landscape where it's those with the word of the president that are all powerful in the United States? Or are we creating a new competitive landscape? And it seems as though what we're tearing down, are we creating something where there are still vested interests, but concentrated in the hands of a few?
Oh, but that's not new.
We're talking about Elon Musk here with the keys to the state, effectively taking down the efficiency in the United States. He's huge in electric vehicles. He's building out his own AI ventures as well. Mm-hmm. But he's having an issue with a company that he was previously involved in because he thinks they're looking perhaps too competitive at this stage.
Yes.
So, are we talking about fair competition now as we talk about the next big players of the future?
Has it ever been fair competition? I mean, we're not talking about. It's not new for any of our viewers that one or two major technology companies in the States are dominating a certain area of growth.
We're talking about the richest man in the world, who also has a platform for media, who's taking aim at any media organization, and now is also taking on OpenAI. When you think about AI, it is actually going to be the next big industry. Think about cloud and how dominant cloud players have been.
Which is why it's being dominated by NVIDIA at the moment.
Well, I think you've got to be concerned who the players are. We want diversity in terms of the players. We don't want concentration.
But you're not going to get it. You know that. if we look at the history of any single technology, we're not going to see some meritocratic, open source world where everyone has equal access to AI. You are the doyen of technology. You know that better than I will ever know that.
Hey, will we settle for a handful of successful companies rather than one?
Well, here's the other thing, and I've had this same conversation with you about the dominance of Musk in the ear of Trump. How long is that going to last? A lot of people I've been listening to are very, very smart in the swamp, are talking about the individuals involved and looking at their backstory and how they don't share. They're kind of like, can I say it? They're quite big egoed. Some might argue narcissistic. I'm not. But these are big egos. How long are they going to be best buddies for? How long is the first bro going to last?
True.
Who knows? Back to the European woe. Actually, it's not European because it's actually a European American company in many ways. Stellantis CEO Carlos Tavares. Well, he's resigned with immediate effect. He was going anyway, but not with immediate effect. The company said there had been diverging views between the CEO and the board. The announcement comes 2 months after Stellantis issued a profit warning and just days after revealing plans to close a plant in the United Kingdom. Charlotte, did you know Charlotte was on set? I don't know if we told you. Good morning to you.
Talk about Paddington.
How are you? Did he get pushed by... Here you go, let me just go straight. Did he get pushed by the Agnellis?
Well, you remember they announced just back in October that he would leave.
Get rid of him.
Well, they announced, as you were saying, that they would leave at the end of his contract in early 26. And at that time, you said, why wait so long? It was a strange news. A lot of people were trying to digest it. It's like, or you announce it, or you just don't renew the contract further down the line, or you announce that he's leaving now. But giving this really long warning that he was leaving, people thought, well, we know they're trying to operate turnaround. North America being quite problematic for them at the moment. And it looks like they want to accelerate things, certainly given the announcement that we heard yesterday. So the resignation taking immediate effect. Carlos Tavares had been the boss of Peugeot Citroën since 2014. Of course, he oversaw the merger there with Fiat Chrysler that became then Stellantis. But certainly, looking at the communiqué last night, say Henri de Castres, who's a senior independent director on the board, saying that in the recent weeks there's been different views that have emerged, which have resulted in the board and the CEO coming to today's decision. So it looks like, maybe some of the solutions they were trying to work on in operate the turnaround where they didn't agree on them, they were therefore accelerating the departure of Carlos Tavares. So the management saying that the process to appoint the new CEO is well underway and that it should be concluded in the first half of 2025. And here again, they had a serious profit warning back in October to go from positive cash flow to a negative cash flow between 5 and 10 billion euros this year. And here again, we know that just after the pandemic, there was more demand than supply, and the way they responded at Stellantis in North America, which made the bulk of their profit, is to aggressively push up prices and supply. And as a result, now they have a lot of stock. There's a lot of inventory in the US. They've lost some market share, so they're trying to turn things around there. But it looks like there's lost a bit of patience at the management looking at things again in North America. Problems with the unions as well. There's been some threats of strikes, etc. And so things have come to a head, and now new management coming in.
We know that there are different CEOs for different times for a company. So one transition CEO, another time a cost-cutting CEO, different point in time, a CEO with leadership vision when they see a disrupted universe. Perhaps he's just not the right person for the job, given that there's so much disruption coming. And I think you need someone who's quite patient at this stage, because the fortunes of the electric vehicle market are not going in the right direction. It doesn't feel like it's going to be a short-term turnaround for any company in the space.
And Carlos Tavares has been a champion of cost cutting, and he's done turnaround, for Peugeot Citroën and that, and cutting prices. But some have said that maybe he's come to the bone now, and that's gone maybe a bit too far. And there's been some quality issues as well with some of the products in some of their US brands, and they say, maybe the current strategy hasn't been working, and so they just need to move on to somewhere new. And again, when you look at the shares of Stellantis, they're down 40% this year. And of course, across the board, there's been some issues, and you can't really compare to Renault because it's a very different story. They have very different exposure, etc. But the Renault shares are up 10%. So there are some positive stories out there when you look at cars, and certainly Stellantis hasn't been one at all.
If I remember correctly, he was the heir apparent to Carlos Ghosn at Renault a long while ago. I thought so. I thought I remember that one.
Yeah.
Karen.
And let's talk about another big automaker, as well as Volkswagen workers in Germany are going on strike today. The warning strikes, which are the first large-scale walkouts at Volkswagen's domestic operations since 2018, will affect every plant in the country. IG Metall boss Thorsten Goger had said it is Volkswagen's responsibility to end the strikes at the negotiating table. Annetta joins us with more. Annetta, the company Volkswagen is demanding pay cuts given the extent of the challenges that it's facing in the industry. Just to stand out or tell us where the unions stand on this and whether there's going to be any ability to negotiate.
Well, the unions are offering a so-called future plan as well, which would entail like a 1.5 billion euro cost-cutting exercise. But in turn, they want to have a guarantee that there will be no layoffs and also no planned closures. And here, that is what the management clearly is rejecting. And that happened on Friday. Management is saying there needs a clear haircut of 10% when it comes to wages. And also that layoffs and planned closures are actually potentially not avoidable because the market only in Europe is lacking 500,000 cars just for Volkswagen compared to the pre-corona time. And of course, that means loads of overcapacities. Thomas Schäfer, the head of the Volkswagen brand unit, which is mainly the mass product, is saying that they need to get rid of capacities because clearly the market is not coming back where it was before. And that's also clearly a sign of the transition towards electrification and also more competition coming from China. So what happens next? Today at 10 o'clock, the walkouts are starting. They will probably last well into the night shift. And that is most likely just the beginning because the union's IG Metall is known to be very tough when it comes to walkouts, and the employees have not a lot to lose because clearly their job are anyway at risk, at least large-scale operations. And in some areas such as Saxony, but also potentially in the north of Germany, in Emden, the plants are really at risk, and they are very important for the respective regions in terms of jobs.
Annetta, I was going to ask you, given the regions and where these plants are, what type of election issue is this going to be then?
It will be anyway in regions which are not very structurally, sort of rich in a way. So it will be mainly Wolfsburg. Wolfsburg is the heartland of Volkswagen, and they do have 120,000 jobs just in that plant. And here, of course, they're not going to close it down because it's like the symbol of Volkswagen. But here, workers will be affected as well. The plants who are said to be most at risk are in Osnabrück. It's a structurally weak region in sort of north of Germany, somewhere in the middle, perhaps close to Hanover. And then also one in Dresden in Zwickau in the east of Germany, which was meant to be a pure play electrified plant. So it will probably push more voices into the camp of the populist or potentially into the left wing, because clearly who is losing here are workers and not the management.
Annetta, thanks for spelling that out for us. Let's push on to another big auto company that is also under pressure. That is Nissan. Nissan Motor CFO Stefan Ma will reportedly step down from his role at the car maker. That's according to Bloomberg, citing people familiar with the matter. It comes as the company announces cuts to jobs and production capacity on the back of a 70% cut to its full-year operating income forecast. Nissan told CNBC it would not comment on speculation.
Right, coming up on the show, Chinese bond yields. Well, let's take a look at those. If someone rolls my prompt, that'd be great. Chinese bond yields touch multi-decade lows as November PMI's data comes in strong. Plus a rare reprieve for Michel Barnier as S&P affirms France's credit rating amid a budget brouhaha. And we're going to hear from the Prosus CEO, Fabrizio Bloisi, as the company posts its first half results. But don't miss that conversation first on CNBC. Welcome to Squawk Box. Chinese factory activity expanded at the fastest rate in 5 months in November, with new orders leading to a jump in production. The Caixin manufacturing PMI rose to 51.5 from 50.3 in October. That is the highest since June. Meanwhile, Chinese bonds are surging, with yields hitting their lowest levels in more than 20 years. That's not particularly good news when you think about it. Yields on Chinese long-term debt have all been sinking pretty much all year and now trade lower than their Japanese counterparts. It's interesting, isn't it? We worry too much about the French yields picking up because of the malaise in the French economy and French budget. And then we worry too much about the Chinese bonds yields going down aggressively because we are similarly worried about aspects of the Chinese economy, Karen. So absolutely fascinating. These markets, Karen.
Yeah, indeed. And as we talk about those yields, we've seen the escalation in the Japanese yield as well. I want to take you to the US markets. The markets in the month of November, you could see, in fact, climbing, very strong trading month all around. And we saw it on that holiday shortened session Friday. Both the S&P, NASDAQ climbing to some records, the Dow as well. 47th record year to date for the S&P 500, the 53rd record for the year. So we certainly saw it also expressed in the small cap space. So that was where the outperformance was for the month of November. Even though we had solid gains for the Dow and the S&P 500, it was the Russell 2K, the small cap space, that exceeded, and we saw those gains really transpiring over the course of November, double digit for the Russell 2K. Pushing on to what we're seeing on the dollar index, a lot of moving pieces, and it's been this commentary from Donald Trump suggesting that he will tackle some of the BRICS if they try to replace the greenback with any other currency. That has given the dollar a bit of a nudge higher this morning, 0.5% in the green. Euro on the back foot too, as there are still concerns about whether the French government could collapse. So that is one of the big moving parts for the dollar index. To Bitcoin, we've certainly seen appetite for cryptocurrencies since the election of Donald Trump. And around the highs, we've had crypto, Bitcoin, Ether, and you can see Bitcoin this morning. That is a little bit softer in morning trade. But again, we are still perched at very elevated levels versus previous months. 96,296. So a little bit of elevation there.
Richard Kelly is head of global strategy at TD Securities. Richard, good morning to you. 2025 looks incredibly, extraordinary on many fronts. The US markets, record highs. Concerns about what the Trump administration would do absolutely turned up to a max for many trading partners around the world. Does this all make sense to you, the fact that US stocks are so excited about their outlook at a time when so many people globally are so concerned about the outlook?
Sure. I mean, I think it makes sense with what we know at this point. I think the biggest thing to emphasize is we just don't have all the facts, and no one has the information we need to actually know how to trade these markets as we get into next year. So that we'll have to wait till after the inauguration of what comes through. But I think overall, you're putting in place a policy of protectionism. That means America first. That means you are promoting sort of internal US products. So that's getting your equity products bid up at this point. And I think when you look on the macro side, what we have the biggest conviction around is that US inflation will be higher than what was expected and global growth will be lower than what was expected. So that brings things like the Fed into question. That brings the easing from other foreign central banks more likely to accelerate. And I think that starts to bring in some of the debates we're having around whether the ECB starts to speed up here, whether the Fed's going to continue to cut. And I think that's what then starts to take you into your bond yields and your FX markets.
But my problem is the same, Richard. I have many problems, obviously. But Richard, you made the point, no one knows what's going to happen. I think it was words to that effect. No one knows what's going to happen in the administration. But the markets aren't taking any prisoners. Again, when you look at the forward valuations of the S&P, they look extreme. And Karen just made the very graphic point there that it's not just the big tech names as well. It is across the board. When I look at the VIX, i.e. people who have made a lot of money refusing to take out any form of insurance policy, trading at 13.5, I see extreme valuations on the market with no insurance policy. That doesn't seem to me like a strategy which is wait and see or caution or basically some form of equilibrium in decision making. It seems quite gung-ho to me.
But I think you still have to start discounting what's coming through, right? I think the biggest negative that we have difficulties figuring out how much to price in is there's no such thing as a US firm or a European firm or a Chinese firm. All of these are multinationals. All of these, their production is spread across the world. Their inputs are spread across the world. Where they're selling is spread across the world. So when you start putting tariffs in there, it isn't clear exactly how that should spill out. But then the offset is you have discussion of deregulation. So that should be a positive you go through. You have talks about tax cuts. That should be a positive for firms. And then when you think about onshoring, that should be a boost to domestic jobs in the US at the expense of wherever those jobs were located before. So I think it's very difficult to shake out. I would say a lot of the investors, a lot of the position that gets on here could turn out being wrong as we go through. But I think everyone is at least starting to try and discount that, the administration will want to try and minimize the negatives and maximize the positives. We just don't know exactly what the tactics are in terms of what the path will be to get us there.
Richard, the data should also play ball. We're hoping, the market is actually hoping to see a bounce back in the jobs report this week after a very slim addition in October. If we don't get that bounce back, it could flash some warning signals about the extent of the US economy. So what are you expecting this week?
I think it's definitely going to be there in the ISM kind of under scrutiny this week. I think there were a lot of distortions in the October data all along. You had the hurricanes and strikes and whatnot going through. I think that brought you that sort of lower number than what was expected. I would expect a rebound in the jobs numbers. I think the unemployment rate probably comes in at 4.2, which is where the market's looking at. But relative to a consensus for payroll sitting around 200, I think that could be closer to 275, even 300, as you just get a lot of the rebound and some of these things go through. So I don't know I would necessarily chalk it up to the jobs market is much better, but obviously the market will take that in. I think the offset will be ISM services probably has been on a over tear over the last several months. I think there you could see some disappointment and pulling back, but still you're in growth on that side of things. It's manufacturing that continues to contract.
Richard, the US economy has been resilient this year. There's been no doubt about it. Inflation coming back to target in that same context as well, not too far off target. What does it mean for the Federal Reserve from here? Because there are still concerns that next year inflation comes back, particularly if we're looking at some of these Trump policies around tariffs. What do you make of what the Fed does for December, given the uncertainty going into next year?
I think for now, they've discussed the gradual path. I think there is still more likely than not that they come in and cut 25 basis points in the December meeting. But I think there is some debate around that in terms of whether that maybe gets delayed or not. But I do think the implications, as I mentioned, of tariffs in the US should be higher than expected inflation. I think that uncertainty we've seen even over the weekend with Trump coming in and discussing, further tariffs on the BRICS, if they continue to make moves to slide away from the US dollar as their currency. I think those threats, those actions will likely cause the Fed to take a step back as we talk about fiscal spending, as we talk about tariffs in the front half of the next year. That inflation risk probably looks a little bit different than it does right now for the Fed. So I think once they see that, they can't go before that starts to come through. But I think once they see that, they can take a step back, wait for that to start to materialize. And then as we get into the second half of the year, that's where I think a Fed that's on pause for at least the front half of next year starts to see some of the downsides to growth that start to come on the back of that. They start to see that inflation hasn't picked up nearly as much as, or wasn't as persistent. You weren't seeing inflation expectations come off. And I think you can continue to see the Fed resume some easing as we get into the second half of next year and early into 2026. But I think it's all the timing is very uncertain. The scale is very uncertain because we just don't know the extent of the policies that are going to be put in place yet.
We started off by talking about how the US, by and large, sees a lot of positivity from the Trump administration's incoming policies. And we've talked a lot there about the negativity for the rest of the world. Is the negativity priced into global markets? And of course, I look at European markets especially, or actually, has it been overdone to the downside and the disparity with the US? Or how do you see it, Richard?
I think you probably still don't have entirely the central bank pricing fully bid in. So I still think you can see the Bank of England deliver more easing than what's priced in right now, but that probably will take deeper into 2025. That's not a sort of December, January. I still think they're on pause at this point. You've got this discussion between 25 and 50 on the ECB, and it does look like there is a sort of desire to do that sooner rather than later. So I don't think you're fully priced on that side of things. So I think on a rates bit, you're probably looking at the front ends of curves able to be bid. good. I think the global long bonds are still going to be driven by what's going on in the US. So that gives you some of those moves in terms of those, longer yields are still going to be driven by the US. So that's not a local factor. I think in FX markets, it is still a long dollar trade. A lot of that's priced in. You're seeing those movements, but I think this is one you don't really have to overthink. Canada, Mexico, China, Europe, these are all the ones that the US administration is looking at very carefully. Those are the ones I think you're still comfortable being short, getting long the US dollar and waiting for sort of the tariff side to materialize, perhaps once you get to those deals, and then that trade can flip as you get into the latter part of next year.
Nice to see you today, sir. Thank you very much indeed for your time and for joining Karen and myself. Richard Kelly, Head of Global Strategy at TD Securities. And for more on November's market action and the month's global economic data, check out the latest edition of the Daily Open on CNBC.com. A trade war is looming. Where am I going next on this one? Could be anywhere, couldn't it? After President-elect Trump announced fresh tariffs on Truth Social. Trump pledged 100% tariffs against BRICS if they undermine the dollar by creating a new currency or supporting another currency. I've been thinking a lot about this one. I mean, it's very difficult for the US to monitor some of that activity. But anyway, it comes after he vowed 25% tariffs against imports from Mexico and Canada, triggered the Mexican president, Claudia Sheinbaum, to phone Trump and Canadian Prime Minister Justin Trudeau to make an unannounced visit to the president-elect's residence in Florida. Are we still going to call that the Southern White House? Is that what it's going to be called again? Anyway, President-elect Trump has tapped former national security official Kash Patel as the new FBI director. Now, Patel has previously advocated for removing the FBI of its intelligence gathering role and firing any employee who does not support Trump's agenda. The president-elect has also appointed Massad Boulos, the father-in-law of his daughter Tiffany, as a senior advisor on the Middle East, and nominated Charles Kushner, the father-in-law of daughter Ivanka, as ambassador to France.
Biden has granted a full and unconditional pardon to his son, Hunter Biden, as he nears the end of his term in the White House. Hunter Biden was set to be sentenced in mid-December for federal gun and tax evasion charges. The president previously said he would not use his authority to pardon or commute his son's sentence. Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.